We've been talking about the fact that the president went on primetime TV last night and, of course, warned of basically dire consequences, or at least a deep economic crisis, if we do hit that August 2nd deadline. We are going to go to Washington, D.C. right now. Ryan McConaghy is joining us right now. He is joining us from the Third Way, says there will be frightening unintended consequences. He is the director of the think tank, which promotes moderate bipartisan advice, and he is with us, as I mentioned, from Washington. Ryan, thanks for being with us. You say at the heart of the matter that Wall Street and Washington don't understand one another. In what way is this going to be most damaging vis-a-vis this August 2nd deadline?
Well, I think right now what you're seeing is that we are really, if we're not at midnight, we're at 11:50, and if you saw the president's speech last night and Speaker Boehner's response, the parties in Washington are engaged in a bit of crosstalk here, and it's tough to see a clear legislative path that gets us, something before August 2nd without some outside pressure. And I think people in Washington are looking for the markets to create that pressure. You hear about a TARP moment where the initial bailout package failed and the markets tumbled. Until particularly the House Republicans see that kind of market signal that we are in fact heading for some choppy waters ahead if we don't get this situation sorted out.
So Ryan, you're basically saying until there is actually widespread panic in the markets that Washington will not be motivated to act.
I think people are looking for a market signal at this point because the parties, particularly, as I said, the House Republicans are so dug in and there's so little time that some external pressure is going to have to break this logjam. And I think a lot of people assume that would come from the markets. But as long as the markets, and I heard several of your guests say before that, it's just assumed that we'll pull this out in the 11th hour, we'll get this done. And as long as that mood continues to pervade, then it's actually, by assuming there won't be a crisis, the markets may actually help to precipitate one.
Right. And well, Ryan, I think I agree with your sentiment completely, Lakshman here. But also, we have jobs growth, right? So I know that a lot of policymakers, including the Fed, have been talking about the markets, but in theory, economic growth, and in particular jobs growth, is up there as a concern too. And in the last couple of reports, we've averaged below 50,000 jobs, which is a huge deceleration from 250,000 jobs a month that we were seeing in the springtime. So what if you get some of this fundamental economic data continuing to weaken? It has been weakening all this time, but I think people have been focused so much on this drama in Washington. Could that wake people up at all, or is it going to really take a market event?
I think it's going to take more of a market event because the context that this debate is happening in Washington is about the market reaction and about our long-term outlook. It's about whether or not the United States is going to be downgraded, what that will mean for our ability to borrow. That is clearly tied into to the jobs picture. If we default, and we lose, some analysts say we'll lose a point off of GDP growth, that will mean 640,000 jobs and potentially a second recession or a double dip. So the two issues are definitely interrelated. And if you look at the sort of grand bargain that had been talked about, it would have included some stimulus up front and about $4 trillion of cuts and revenue down the road. So there's an acknowledgement you need to handle both these things. But right now, the political system doesn't seem to be able to handle both issues simultaneously.
We thank you so much. Ryan McConaghy joining us there from the Third Way. He just referenced that S&P data is 640,000 jobs. S&P estimates if we miss that August 2nd deadline and if the U.S. loses its AAA rating.